A recent article claims that BlackRock and a couple of the other major asset managers out there are screwing over the world. So, is there any truth to that? We'll get into it here. By the way, I want to mention that I'm going to be doing some live streaming. Again, this is the second course that I have taught over on lighthall.co. I'm doing a 4-class course, this time on different ways to get into the finance industry, ways to find internships, what to look for when you're looking for a new job, and the best tips and tricks on how to build your resume, how to land the right interviews, and get into a role that you really enjoy. So please make sure to click the link in the description down below. Follow me over on Lighthall and attend those live streams. I live stream every Thursday night from 7 to 8 p.m. Eastern time, so thanks for joining me there. Maybe one of the first things to keep in mind about this article claiming that BlackRock is screwing over the world is that it's from a website titled Apocalypse Post. So right away we should note that there's a chance that there's a couple conspiracy theorists over at the Apocalypse Post. Maybe those conspiracy theorists ended up being the people to write this article. I don't know the author of this article, so I can't say for sure, but this isn't necessarily a mainstream financial publication. They start off the article by saying there's another group we need to all watch out for if we want to avoid the world inevitably getting destroyed, if we want to avoid catastrophe, and that is major asset managers. And when I saw that, I thought to myself, what are they talking about here? The world's 3 largest asset managers, BlackRock, Vanguard, and UBS, control $21 trillion, equivalent to the US economy in 2017 and twice the global hedge fund and private equity industries combined. I want to point out for anyone who's unfamiliar with how asset management works or how BlackRock or Vanguard's business models work, they don't control that $21 trillion. What they do is they provide a vehicle in which people can invest their funds, and then they benchmark those vehicles to do exactly what different indexes around the world do. So if that sounds confusing to you, if you're not familiar with what indexes are, spend a little time online reading about it. I'll give you a quick example. Maybe the most common index in the US here is the S&P 500. That is the broad measure of the stock market. And so what Vanguard and BlackRock do is they create an ETF that just is a vehicle that benchmarks itself to the stock market. So really BlackRock and Vanguard are giving people exposure to the markets. They're kind of like the road on which cars can drive. People can invest their money. People are the vehicles in this scenario getting to where they want to go. And BlackRock and Vanguard are just giving them an avenue to get there. They're giving them a logistical investment vehicle to take. So they certainly are not the ones controlling the car. They just provide the infrastructure necessary for people to make the decisions they want to. So to the authors of this article, or anyone else out there who has faulted BlackRock or Vanguard for certain things that stocks are doing, and BlackRock and Vanguard being large shareholders of those companies, know that they are not the ones that are making all the decisions on this. They're simply benchmarking people's dollars to an index. The article cites that the big 3, BlackRock, Vanguard, and UBS, own more than 20% of the shares in the average publicly traded company in the S&P 500. I'm sure that's true. And you know, they make a good point later on in the article about voting rights. It can be a little curious or worrisome if a couple institutions own way more of the voting rights for the majority of the stocks in the index. But just in as far as a percentage share of the companies that they own, you know, it's not like they are managing those companies or making decisions on what all the corporations across our country do. They're simply allocating, they're creating vehicles for people to allocate dollars towards. By the way, I'm making this video a little more casual, a little more conversational. I saw a few videos in this format that I liked on YouTube. So let me know in the comments down below maybe if you really like it or dislike the kind of flow of this one. But the article says that but the big 3 cast more than 25% of the votes at the corporate shareholder meetings. That's what I'm sort of referring to. They exercise something akin to state authority, or the largest corporations that account for the vast bulk of economic activity. Yeah, the biggest companies make up the most economic activity. And if BlackRock or Vanguard were really controlling those, then I think we'd have a problem there. But they are supposed to be casting those proxy votes in those company shareholders' meetings in the interests of their shareholders, BlackRock and Vanguard shareholders, which is the investors like you and me. So hopefully that's what's getting done. We can't guarantee that that's the case. So this is one area where I think the article makes a fair point, but we can't also necessarily assume that they're making evil decisions just by the nature of their size either. They mention how some folks have called BlackRock the 4th branch of the government. I actually think there's a little bit of merit to that term or that slang as well, just because the Federal Reserve utilizes BlackRock so much to make vehicles for investment dollars and to make the transactions when the Federal Reserve needs to buy or sell securities to control monetary supply. So BlackRock isn't the one making the decisions on that. It still is the government, but they're helping out in such a way that there has to be some type of impact or influence from them there. If climate justice is to succeed, it will involve taking on a new branch of government. The big three asset managers own more than 20% of shares in fossil fuel giants Chevron, Exxon, and ConocoPhillips, and 30% in major agricultural businesses, making the largest shareholders in the two industries most responsible for the majority of greenhouse gas emissions. Remember, they themselves are not the shareholders. They are literally just providing an avenue for other shareholders to deposit their funds into the shares of these companies. So BlackRock and Vanguard are not deciding how much of people's money are going to be allocated into these stocks. They're just matching what the indexes do. So really, if you wanted to make a gripe on people's investment dollars being routed into oil companies like they use in this example, you'd have to complain to Standard & Poor's or Morgan Stanley with the MSCI index, or other index providers, Russell, other index providers that decide or come up with a methodology by which companies are weighted in that index. Those are the people that are maybe controlling the amount of dollars that flow into each stock when people invest their money in index funds. It's not the index funds themselves. Those are just a vehicle. This is still a moot point. I'm probably going to be repeating myself over and over in this video. The faceless financial giants are not just funneling money into companies causing these crises themselves, they're also profiting from it. Because mammoth asset managers, they make money when more money is invested in their fund. That's true. That's exactly how it's going to work. Just like a toll road makes more money the more cars that drive on the road, but the toll road isn't telling the people where they have to drive. I'll stick with that transportation example. They're the largest financiers of the global arms trade. I assume they are referring to the fact that they hold a lot of shares in companies that may participate in arms trades around the globe. BlackRock and Vanguard are not financing those operations. They're not giving loans to these companies. They're not providing the cash flow necessary for those businesses to proceed. They're using this term financing very loosely, in my opinion. Again, they are just vehicles by which people have deposited funds, and then they decide to invest in an equal proportion to what the indexes say into the stocks. And since they're the biggest vehicles, they have the biggest proportions going into those. They're investing in private prisons, migrant detection centers, drones, and biometric technology that's revolutionizing increasingly militarized border violence against displaced peoples around the world. Now they're trying to make it into a race thing or a minority thing. They're just making the same very illogical argument against these vehicle creators that do happen to be charging very low expense ratios and doing a lot of marketing on TV, which is why people end up putting a lot of money in their funds. They have nothing to do with the global arms trade or biometric weapons against impoverished populations. It's just a totally ridiculous argument here. The article goes on to say, no wonder that climate change represents such an opportunity for asset managers like BlackRock. What are they talking about? BlackRock's annual letter made a State of the Union saying, there is no company whose business model won't be profoundly affected by the transition to a net zero economy. I think that's just sort of an economic outlook. Probably even the most green of socially responsible investors could agree that when regulations get tighter, companies have to change their practices, and it will create differences in their bottom line. Meanwhile, the world is decades late and trillions of dollars short on less dystopian responses to climate crisis. Yeah, I probably agree with that sentiment. The world could certainly be doing a better job at controlling climate change, specifically in some of the emerging markets that have a, pretty unnecessary amount of CO2 production per capita relative to all the other developed countries in the world like Europe and Canada and the US. But BlackRock and Vanguard are not the people who are creating that issue. They're just vehicles. They're just roads. Are roads responsible for cars polluting into the economy? We can stick with this example once more. No, you would argue that the cars or the efficiency of the engines within those cars, or just people driving them as much as they are, is the problem, not the infrastructure that allows them to travel. So this article is debunked. You heard it here first. If anyone wants to argue it out with me, feel free to in the comments down below. I'm happy to hear your opinion. Probably not going to agree with it, but if you have some good content, go ahead and try to change my mind. I'll be open to it. Again, thanks for watching, but don't forget to check out the live stream on Lighthall every Thursday night for the coming month from 7 to 8 p.m. Eastern Time. I would appreciate seeing you there too.